Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance. Ryan, it's great to see you again. Welcome back to Trade Talks, and no shortage of fireworks to kick off Nasdaq-100 trading for 2022.
Yeah, thanks, Jill. The rocky start to 2022 continues, and we saw QQQ and QQQM down nearly 2.7% for the week. S&P 500 down 1.65%, with S&P 500 value pretty much flat. And we've seen this aversion to growth really continuing over the past 2 weeks as inflation concerns and subsequently higher rates weighed on sentiment. We saw rates climb higher, to the tune of the 10-year jumping over 5% from 1.64% up to 1.736%, and that was ahead of this morning's CPI print, which we'll touch on in just a moment. But also over the past week, we saw crude oil continue to march higher. Rising inflation, weaker dollar, along with many on the street anticipating that demand going to outpace supply this year. We see discussions around lack of investment in wells over the past year plus. OPEC and its allies kind of slowly easing their supply cuts that were implemented back in 2020, and some members still struggling to meet quotas. Beyond that, Omicron impacts being fairly minimal is kind of the read through. All of this kind of equates to a perfect storm for oil prices. So, the main story over the past week has been just those increases in both in rates as well as oil prices. However, we look at yesterday, that buy the dip mentality that we've seen a number of times over the past couple months, it came back into the fold. Investors gravitated towards these beaten up growth names, with QQQ overweight sectors, tech, discretionary, and communication services outperform all other sectors in the markets besides energy. Now this morning, we look at rates, and the CPI figure was released for December, and it showed a 7% year-over-year increase. This is the fastest increase since 1982. Despite that, upon the announcement, markets were trading higher. We did see a lot of that kind of growth-oriented names kind of pick back up. I think largely the figure was priced into markets. Most of the economists' forecasts were for 7% year-over-year growth. So we look at that kind of that priced in mentality, and I think the market was largely relieved to not see an even more outsized CPI print, which at that point could suggest even more aggressive tactics by the Fed. The Fed recently, we've seen some hawkish actions, quickening the pace of its taper, all in the effort to give a little bit greater flexibility to address rising inflation. And yesterday we kind of saw that discussed by Fed Chair Powell. He did note that the Fed will look to quell inflation, really pointing to rate hikes, and will likely start to decrease their balance sheet this year. But with that, the other comment is that the U.S. economy is in a much stronger position versus the last time that the Fed shrank its balance sheets.
Right. And Ryan, if we take a look at your last chart here, where we see the different sectors that are contributing to the Nasdaq-100, what are some trends that you see there?
Yeah, well, right across the board last week for QQQ, and largely for the S&P 500 as well. The only two sectors, of course, to finish in positive territory: energy and financials, with energy up nearly 7% and financials advancing by over 2%. But as a note, bank stocks are scheduled to release to begin releasing earnings this week. We'll get our first look at Q4 results. Nasdaq-100 earnings results really ramping up in about 2 weeks or so. And with that, I think we're going to keep an eye on mentions of lingering impacts from Delta early in the quarter, mentions of Omicron and the perceived impact to earnings and business. And then, of course, any impacts from supply chain that we've seen over the course of the quarter, future outlook on that front, and any mentions of inflation and higher prices and how that's reacted, or how consumer demand has reacted to that. So a lot to look forward to over the next coming weeks.
That is for sure. Between earnings, inflation, rate hikes, Omicron, we definitely have a lot to look forward to. All right, Ryan, great to see you as always. Thanks for the insight, and thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.